Hi, I'm John Sullivan with 401k Specialist from the floor of the 401k Summit here in Las Vegas, and I'm joined by Ann Lester with JP Morgan Asset Management. And we were talking a little bit about some of the trends that you're seeing with participant savings behavior and spending behavior. What are you seeing right now?
Well, what we're seeing is a really interesting effect of auto-enrollment, which is that if people get auto-enrolled and their company doesn't escalate them or increase their savings rate, people stay where you put them. And so on the one hand, it's great they get in, but staying at 3% forever is not a great recipe for success.
Understood. So then what's the solution?
Well, the solution is auto-escalation, and we think plan sponsors really should be thinking about escalating people all the way up to 10% or even higher.
And what is the response from plan sponsors, though? Is it a lot of a pushback? Is there a lot of education involved?
So yes, there's some education involved. I think plan sponsors are reluctant to do things that they perceive participants not wanting. You're taking money away from their paycheck, but when you dig into the data and you ask participants what they think, they actually are happy to be enrolled, and when their contributions are pushed up or auto-escalated, they almost all stay with the program.
Understood. Now, you're heavily steeped in target date funds, obviously. From a behavioral standpoint, how does that help?
Well, I think getting the right level of risk for where you are in life is exactly what people need to be focusing on. And so I think, again, auto-enrollment, auto-escalation, defaulting people into a QDIA, qualified default investment alternative, is always the right thing to do.
And TDFs, some of the market shocks, it seems like they stay invested, they're not jumping in and out.
They do.
Is that something that you build into the design of TDFs themselves, or is it a byproduct of kind of what's happened?
I think well, I hope it's something we've built in, but really I think one of the reasons it happens is because we're telling people that these are long-term investments and a professional is managing them, so they can just leave it to us.
Understood. Now, what's happening at JP Morgan Asset Management? What's new, what's cool, what's hot, what's going on?
What's new, what's cool, what's hot? I mean, to me, it's all about, making sure we get the right kind of data and integrate that into our decision making. And for us, the latest is actually incorporating some insights from our retail banking colleagues. So we've now got 5.5 million households, all anonymized. We understand how they're spending money as they age and moving through retirement, and that's giving us huge insight into how we should be building products for the next phase of life.
So this is the next iteration of big data?
Yep, absolutely.
That's fantastic. Exactly what we needed. Ann Lester, JP Morgan Asset Management, thanks so much for joining us.
Thank you.
Once again, I'm John Sullivan with 401k Specialist.